Trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Okay, let's pull this back up. Here we go. Stream up. Okay, so we got about 4 minutes here. We'll see what it comes out to be. It looks like we're pretty pegged here at 26.5. So maybe after that, we could maybe see a move above the VWAP. I'd take one. Oh, got a couple of people in here. Okay. Well, they're already kind of buying it into it, which is interesting. So normally I'm not home when the action happens, so I've only seen this a few times. I only know how price reacts to it. I haven't necessarily seen the DOM during it, so should be fun. Okay, so there is a little bit of a pull. The heck? Wow. Did that just print all at once? In 265. I don't know if that was there before. Maybe that was just there before. Pretty quiet. Thanks for using the Twitch link, by the way, guys. Okay. So do we get a number now? No, not yet. They do appear to be buying though. Yeah, actually that's flat, isn't it? Dang. So that was where I probably should have just punched in with the market order. Okay, did those both get filled there? Yes, they did. So
block buy.
okay. Cool. Big block buy, 2 big block buys. Wow. At 85 and 90. Okay, so here's the number 2.58. The 2.7
Dominic
bid
set
to
out
cover.
for +2.
Oh, so it was actually more bullish than last auction. But it was a higher interest rate. So yeah, I think we might get a good buy off of this. So we're just gonna hold this. My automated system hasn't taken one yet. Oh, I guess it's outside of its trading time, so it's not going to take any. Yep. Good back ticking, good takes. This 29 though is being a pill. Oof, just popped my back. I hope you didn't hear that. It was nasty. So what's the holdup? I got to take 190 in the 5-year still, I guess. So this is maybe where you take the one tick we were talking about. You buy 2.8 half. You would have gotten filled for sure. And you would have gotten filled to 29. I don't know if you would do it again. Hmm, 30 years, one tick higher, and the 5 years, one tick lower. There you go. Wow. Very strong take there. 29. They bought through 5,000 contracts and put up almost 2,000. I guess we still got some steepening going on. No, it is flattening. Interesting. Flattening, but we're going up. Yeah. Not really getting many sellers there. I mean, now they're starting to trade 29.5. I'm sure that they'll probably push up again here in a second. Good. Another solid take. My bird outside is cooing at my wife.
Heath said single print at 30 in ZB.
Okay. Thank you. Good observation, Keith. I didn't even think about that. Let's see here. When do I need to be? Okay, so I need to leave at 12:15. We might let this one ride for a while. I've seen days where it just kind of bubbles up the whole afternoon. Many times where I was like, this should be going up, and it didn't do it, and then after the auction it went up. Now here in ZN we could be going like, oh bother, my thing is all messed up. At least high of the session. I could see at least high of that session. Okay, so CF is still having a little bit of a Well, that it ticked down was not too positive, but wasn't too aggressive. We might see something where it will come down back to the support area and then make a push higher. I don't want to get out yet. I got a good position down at 27.5. So I'll just move this up to take a tick just in case. Well, they tried it there. Yep. Once again, buying very aggressive. 4,000 all at once. Almost 2,000 immediately put up. This is 5-year.
Heath said, man, you got in at a really good spot. I'm long from 28.5.
Well, I should have bought it at the VWAP, right? Remember felt like I got flat-footed? I feel like we should still be moving up though. You got 28.5. You got 28.5, you're still okay. Right? Because here's the zipper. You caught the bottom of the zipper. So if this does go against us, you're gonna lose like one tick at most, right? Come on, buddy. I don't know if that was my data feed or it just got that slow there for a moment. Come on. Okay. They did touch 180, but only 7. If I don't start seeing buyers come in, I might jump out. Good deal. Good deal. No, come on.
Dominic said, what is the time scale of your charts on top there, Seth?
I think it's a 1 minute. I honestly don't pay too much attention. The interval is 60, so. But I mostly just kind of set them to be so that I could see enough. because I don't really care about this part. I don't mostly care about the cumulative delta. It's the main reason I have it up. Oh, and it looks pretty. Gotta have the pretty screen for it, y'all. Get out of here, come on. 340 guys in the 5-year. That's nothing. You just buy that.
Dominic said, okay, Ty, I am mostly looking at the DOM myself too. But also have 1 minute charts up.
Yeah. I think the cumulative delta is really important to look at, because very often I've looked at the DOM and I'm thinking that they're buying, and then when I look at the cumulative delta, I find out that it's mostly even, if not selling, because it's hard for your brain to keep track of, how many times is it actually reset and how much was actually being traded every time. So most people just like in the No BS videos, he uses the power bars, like these things. And it kind of tells you the same thing, but with a number. But I just like the chart. Now that it's there in Jigsaw, I think it's worth using.
Stockwet said Delta, maybe Tucker was referring to this one. Drive.google.com.
Yeah, that's the
Heath
book.
said the 10 is so relaxing.
Yeah,
LOL.
You got
Delta
it.
said thanks.
Yeah, please don't post that stuff. You get the link though, but we don't want to make anybody upset. John is our friend, so please don't link his stuff.
Dominic said try the 5-year for real kiddie pool fun. LOL. Heath said haha.
Well, the 5 years is not bad. The thing is, just to cover the cost of the trade, you're gonna have to get more than one tick, right? Yeah, it's gonna lift. You see all those guys like 300 jump off there? They're kind of waiting for this 5 year to give up at 18.7 and break out. And that the 10 year seems to really think it's going to happen. See them pulling now, they're 3,000. Come on, buy it. Can't believe there's 650 there. They don't know, buy it. Too afraid of it. Oh, okay. They're starting to give up hope a little bit, maybe? Yeah. Or maybe we just need an iceberg here at 18.5. Yep, there it is. It's a little funny how reluctantly they give it up when it's ticking down, but then when it ticks up, see, immediately they're like, yep, okay, we're going up again.
Heath said Matt. +1.
Meh.
Fooled me.
The tick down? I wouldn't say you got fooled, though. I mean, it was like that push up failed. It was a failed push up, and they're saying we have to come down a tick and see if we can attract more buyers at a better price. And then maybe if we tick back up again, now I have some shorts that are stuck out that maybe have to buy 29.5. Plus, this might still fail here again because there's just not a lot of people buying that 18 3/4 where the iceberg was. I'm gonna do it here. Iceberg on the offer. It's back to 4,000 here at 29. It's getting a little better here now. They just flipped the 5. And it flipped back. $19. It's all buying. Nice. Very nice.
Block sell.
Don't like that. Okay, so +4. Looks like I'm probably going to get more out of this, but I just don't want when those are coming in. Market orders that big against me, no thanks. It's good. 5 tick. Actually, I think on this one. Oh, did I not? How did I? Oh, right, because I averaged in. My robot took one trade. That's what that is. That's why it's 125 instead of 143 or whatever it is. On the
Dominic
cumulative
said,
delta, are you looking at trades, uptick, downtick, volume, or volume? So I believe it's just straight orders. Let's see here. In the auction vista, cumulative delta. You can't even, it doesn't even let you change it. Parameters. So I'm pretty sure that it's buys versus sells and not uptick, downtick. Yeah. So the reason that I care, because I think uptick, downtick does appear to be a little bit more, as I think it was Keith was showing yesterday, or no, it was Keith was showing yesterday that it does seem to be a little bit more indicative of if we tick up or tick down. But I want to see, I'm trying to track, other traders specifically, right? So here, they came back a tick so that they could catch some guys short and push them out. That's what that was. Or at least that's what I believe that was. I suppose it's one possible explanation out of maybe 2 or 3 explanations, but given the context, I think that that's what happened. Was they pulled their orders so that some guys would go short, and then they bought it back up so that they could stop them out. Because when we broke through 29.5, it went pretty quick, didn't it? And if you're doing it uptick, downtick, you might not necessarily see that. They are absorbing at 29.5, so there could be more in this. But this is where I'm saying maybe you take one tick, maybe you buy 29.5 and sell 30. Because basically you've got a bunch of people that want to take trades at both of these prices, and you're just providing them liquidity.
Heath said okay. So I'm trying to understand what that guy was doing that John was interviewing. We got a ton of absorption at 29.5. How would he have traded that again, Seth?
So basically the way that I will think of it, so I'll explain 3 different ways, okay?
Delta said what's the diff between volume and trades?
What's the difference between volume trades? I don't understand that question. But let's answer Keith's question first. So there was an iceberg at 29.5. So basically the first thing is that these kind of one tick trades are usually available in places where there is demand for liquidity. I mean, a lot of people, 10,000 people wanting to trade at 29.5, given that's a lot of market orders, but that's a lot of limit orders too. And so those are the places where these tend to work out the most. And you'll notice that when there's a big iceberg here, there often tends to be a lot of trades go through at the levels around it as well. So one particular way that you could do it is you could say, okay, there was an iceberg, and so I'm going to join the iceberg. That is, there's an iceberg buying at 29.5, so I'm going to buy it at 29.5, and I'm going to sell it at 30. The other vice versa is you could say, I'm going to sell it at 30 and then buy it with the iceberg. So why would you want to do one versus the other? Well, it would depend on the momentum, right? Right now, I might actually avoid taking that particular one because we like just barely pivoted and we're like one tick off of the pivot. So I don't really know. I don't have a clear read on the short-term momentum. If I think that the momentum is down, then obviously it's better to fade the iceberg. And if I think that, you know, the momentum is, if this is kind of a choppy area and that we might pivot here or we might go against, then I might want to join the iceberg, right? So with momentum trades, that's where you ever seen me do the level break one, right? When it's when there's strong momentum, I always trade against the iceberg. And when it's really range bound, I want to join the iceberg. But the other thing that I do, and when I took similar kind of one tick trades, although the one tick trade that I used to like to do the most is like right here. The level 2 is 300 by 300. So here you would have gotten filled at the 25. Now it is very likely that they'll sell 24 and you would have gotten filled at 24 too. Okay, almost. Needed 100 more and you would get filled. Oh, wait. Come on. Don't make me look like too much of a fool. Anyways, I started doing this particular trade and I kept track of it for a month. I stopped tracking it because it didn't happen very often. I wasn't seeing it enough. It happened like once a day. But, and I did that. I said, okay, which one gets taken first? I'll always fade the one that gets taken first, or vice versa. Or what if I just always go with the momentum? Or what if I go based off of where the last balance area is? And I found that the best way, and that was a good tick up, the best way was going with where these interest areas were. So in the 10-year, the clearest interest area that we have is 29. So that means that if the momentum is buying, I only want to do this if it's between 28 and 28.5, basically. And if I sell, I only want to sell it between 29.5 and 29. And then it's just kind of a question of where is actually the iceberg. So if the iceberg is at 29.5, then I would, you know, sell into it with the expectation that 29 is traded so many times I'd be able to get out. You know, in this instance, I still think that the long-term trend is up, so I wouldn't be selling it. But so you kind of combine those two things, where you are in relation to the last interest area, what the current trend is, where the iceberg is located, to determine which way you want to trade it. But the whole trade basically hinges on the fact that the price where the iceberg is and the price immediately before the iceberg are very likely to clear several times. Yeah, that's the whole trade. Another way of looking at it, these interest areas, the interest area basically signifies the location that had the highest number of clears. Yeah. If you wanted to get long, you could have gotten long at 29 for sure, right? If you got long below the 29, that was good. So that's one of the ways that I always judge my entry location is I say, okay, I got in at 27.5, it went up, and then the interest area became 29. So that was a good trade. But if I get in, and if I got in at 29 and then I find out that the interest area is at 29, then I start to be like, I don't like this trade so much, because I know that if I lose, for me to really know that I lost, it's going to have to trade down to 28, and I'm automatically 2 ticks down, maybe 3 or 4. Whereas if I had gotten 285, I might get 0 or -1. So, and that matters, really matters. I mean, you, Keith, already kind of have a feeling for that, because when it's the range bound days, you always pick the right one. I just wish I knew how you knew where they were going to be before they occur. So I think that that's what that guy in that first webinar was talking about doing. Oh yeah, I should tell you, when I tested it, because I basically forward tested it and I said, okay, if I had done this strategy, would I have gotten filled and made a tick? If I had done this strategy, would I have gotten filled and made a tick? And, you know, I kept track of like 4 different ways in my head. And the way where you incorporated the interest area had an 80% win rate over 50 trades. How are those column areas of interest different than the total number of prints in your center columns? Well, because the only thing that matters to that is that the price got cleared, and not necessarily how many orders traded there. So it could be a place where people are only bidding and offering one contract back and forth. Yeah. But it generally indicates that it's balanced there. It's balanced, but that people, both buyers and sellers, are willing to trade at that price. And you can see when it changes too, right? You know, if that's a 29.5 is like traded both ways several times, and then all of a sudden we come down to 29.5s and only one person buys it, then you buy that, because that means that buyers are definitely in control. Yeah, so I did take a long at 29.5 and went opposite of the iceberg and grabbed 1 tick off of it. See? Exactly. And the thing is that even depending on, you know, which way you do it, it's still like a 50-60% trade. Like you can like always fade it and probably still get it 60% of the time just because of the fills. I'd prefer the 80% probability though, right? But the thing was, I guess I feel kind of dumb watching that interview, because I've seen it so many times, and there's been so many times where I've sat there and I've said, well, you know, I could just take the 1 tick. Why not? But then I always sit down and I say, well, yeah, but when you look out at like the number of times that you do that and everything, if you only ever just did that, it wouldn't really be worth it in the long run. But I think that I was basing that all off of this 300 by 300 trade, or actually I think it was 400 by 400. And, you know, I only saw that like once a day. But how many times a day do we see these icebergs? More than once a day, right? More than enough to get 4 or 5 ticks off of it. Then, you know, in the summer, you're definitely going to need it. So in the summer, that's like the only trade that you have, and even just waiting for the fill around the iceberg is going to take 20 minutes. That's the worst. So I'm wondering, now that I've taken that trade, does it show up again in the jigsaw? Was it just that when my thing reset, it didn't take the... It wasn't accepting them? No? I thought that there was a... Oh, let's do that. Recent trade stats. And let's see if it picks it up now. I don't know. I'm concerned. Jigsaw, please fix. I had 2 longs today. It says I didn't take any. Wait, maybe if I just go to my trades day? Oh, yeah. Oh, no, wait. It says I was in... Oh, no. That's wrong. It thinks that I'm still in a trade from October 27th, where I bought. Oh man, that's hilarious. I think I bought there and I was wrong. And that was like when one of my Combine accounts got stopped out and it wouldn't let me trade anymore. And Jigsaw didn't see the broker close it. And so it thinks I'm still long there. And that I've made 8 ticks off of it. Oh man. Alert sounds. I swear it's in here. I just don't see why it's not. And if I go File, Tools, Resend Trade Stats, I still don't see like anything. And I go and refresh. Nope. So maybe it takes longer. Maybe they only aggregate it on a certain time period, but that sucks. No, let's look. I haven't even looked in YouTube. Oh, okay. Nobody's saying anything in YouTube. We're okay. Oh, this is an interesting story. Okay, so I could have gotten out at 30. Oh well. I actually think this just could continue bubbling up, but I don't have the time to go and see it. I have 4 more minutes and then I need to go and eat, and then today at work we're having a party, so... Price level targeting. The Fed worrying about next recession considers changes. The solution gaining most traction and mentioned by officials and academics is called price level targeting. What is that? Oh my. The Fed typically has lowered interest rates by 5 percentage points over time to stimulate the economy in recessions. And it's like right now, it's like what? 2.83. What was the bid to cover ratio on that last one again? Oh yeah, okay, 2.58. That's a problem, guys. Quoting a recent research paper, Summers suggested the Fed could be at zero interest rate 30 to 40% of the time in the future unless it changes the current regime. Oh man, I don't like the sounds of this at all. Price level targeting would ratchet up the seriousness of the effort. It would account for those past misses and prompt the Fed to aim for a higher target in the future to make up for its prior shortcomings. The belief is that this would convince markets and consumers of the Fed's commitment running a higher inflation rate to account for prior gaps. So they're saying because inflation didn't hit the 2% target, we're going to not raise rates even though it's above the target for a certain amount of time to make up the gap that we had. That sounds like a dumb idea to me. Am I the only one that's sitting here going like, what the F are you thinking? Price level target will keep rates lower for longer. Oh joy, so now it just makes the problem worse. Over time, it hoped that a price level target would keep the Fed away from zero, giving policymakers ammunition to fight the next recession. How would that keep the Fed away from zero? I think it would keep the Fed at zero longer. Yep. There's concern that the Fed will introduce more volatility to both inflation and growth. Okay, good. So I'm not the only person that's like, that's a dumb idea. Powell hasn't been approved by the Senate yet, but he's supposed to start his term in 3 weeks. Well, that would be really bad if they don't confirm him. I think that the Fed's stimulus has been working exactly as well as they have wanted to. And that's evidenced by the fact that for a good 6 months, they were saying, oh, we're not hitting the target, we need to do something. We're not hitting the target, we need to do something. But then they still ended up doing the other rate hike in December anyways. I think that it's all there. It's just that the inflation isn't exhibiting itself in the same ways that it has in the past because of the global economy. I think that they're all buying Bitcoin instead of raising wages. That's what I think's happening. If we open today over 149.10, there's a good chance for a bull market to kick out the pre-market week high 150.5. But they haven't even gotten close. Yeah. Give it some time. We usually have a bubble up after the thing. This could just bubble till the end. Anyways, I gotta go. So good trading today. I will see you guys tomorrow.